Hi all, Joshua Stega here from etfadvisor.com.au, and it's time for our weekly update again. And I just want to say thank you. We've finally reached 1,000 subscribers on YouTube, so big milestone, bit of confetti. We'll see if this works. But thanks all for watching, and I hope I can give you a bit more insights today. So today I'll be looking at, firstly, the US market, and we'll just see what's going on there. Then I'll talk about the Aussie market as well, and why that's a bit of has some reason for caution at the moment. So I'll show you why. And point 3, I'll show what I'm interested in at the moment, what's been holding up best, what I'll look at buying if the signals keep unfolding for a Christmas rally. So we'll see if that all plays out. But let's get started. Let's get started with the US market. And the big thing that we've been watching for subscribers was the volatility index. So this is going to tell us a whole lot, and you can kind of see, this on the weekly chart. You can see that this was the first tariff spike, and then back here on the daily chart, that was when Trump announced further tariffs for China, and then so that caused a bit of a spike. And then we've had a bit of like what seemed to be like a liquidity kind of crunch that caused another spike here. So I was getting worried that, and if you look on the weekly, it kind of looks a bit similar to what we saw at the start of the year, which then, spiked to extreme levels and we had a huge correction. So the thing that I was really watching there with the market was, is that going to spike out again? So we basically, for subscribers, put a line in the sand and said, look, if it starts moving up above there, look out. But if it tapers off, then things are going to look a whole lot better. And that's exactly what happened this week. And now we're well below all those moving averages. The low of the year for the VIX was, probably late August when the market was kind of firing. And we looked to be on our way back down. And it was actually quite a strong night. Well, we had Thanksgiving on Thursday, so the market was closed in the US. And then a partial trading day on Friday. But it was actually quite strong. So let's have a look at the S&P, and you can kind of see it's very close to all-time highs. So what I'll be looking at here for subscribers is to see how the market reacts there. I'm not expecting to shoot straight through. I'd expect a bit of back and fill, and then perhaps it can start to move. But certainly positive signs, and you look at the VIX as well, that's a good sign, these two things lining up. And the other things that I wanted to look at was the S&P 500 equal weight ETF. So this is basically if you just had an equal weight across all 500 components of the S&P, instead of being a market weight where you're going to have, some stocks that you hold 10% or 5% weightings depending on their size. The equal weight just has 500 stocks. So, an equal allocation to each of those stocks. And you can see that was looking really weak back here. But it was kind of like in a bit of a base. So we basically said, look, it's got to hold that. And then if it can start to move up here, it'll be interesting. And that's recovered really nicely, almost back to previous highs where it had been quite weak. So once again, I'm not expecting to shoot straight through, but I would expect a bit of back and fill. But it looks really constructive. So I'm happy to see that. And also for the small caps, I mean, this was looking a bit of a worry. And let's just look on you'll get a better picture on the monthly chart back here. But how we've been talking about is that V-shaped rally, and they don't usually work. You just need time. And essentially what's happened here, there you got your V-shaped rally, and we're looking for some back and fill because there's going to be some resistance back here. And that's exactly what's played out. So essentially, then on the daily chart, this is the kind of back and fill, and we did go under those moving averages. We stayed above that 200-day moving average. But yeah, strong few days, and we're almost back to those highs. So once again, I'm not expecting to shoot through, but a bit of this and a year-end rally would look really good. So I think the US market's looking really interesting, and it's coinciding with what looks to be some rate cuts coming. So the odds of rate cuts have increased to almost like guaranteed now, whereas 2 weeks ago, back here, it was looking like the rate cuts weren't going to happen. But now it seems to be rate cuts are back on. The market likes that. And the other factor now is there is a general or a global loosening of conditions in terms of financial conditions. So in terms of the money available in the system, essentially, and you're seeing, that's probably where we've had that recent kind of contraction in liquidity, and obviously affected things like crypto and Bitcoin, Ethereum, which had been, obviously done very well, and they've given a lot back. But yeah, we're creeping up there to points that, we've seen post GFC, 2012, and even back to COVID. We're almost back to those levels. It's pretty amazing, to be honest. So certainly there's a lot of liquidity out there. There's a lot of money coming back into the market, and likely that the US will start, some quantitative easing now, just to free up the banking sector, because that's the real problem. In the back end, the government, central banks have so much debt, and it's kind of freezing up the system. So that's kind of, the market kind of has a bit of a shakedown every now and then. And I think Bitcoin was really the one that got hit the most from this. So it'll be interesting to see how this plays out. And this is another indicator to be watching. It's kind of held this, if you look at that as being a kind of trend line there. We don't want it to go any lower than that. If it goes lower than that, look out. You're probably at 60,000 next. But we'll just see if it continues to make higher lows and can build its way out of that. But, that's an interesting kind of data point to watch. And that's the thing. So I think the US market looks really quite good, but we're watching that closely. And people are certainly very bearish, not expecting a whole lot from the US market in the near term. So it could really surprise to the upside. So that's our position on the US market. Looks really constructive, and we'll be watching to see how that plays out this week. NASDAQ doesn't look as good, and that's probably a good sign, because really we don't want it to be all tech, and I prefer the small caps to move. This looks constructive, and if it did that kind of thing into new highs, I think that would be very constructive. So let's also have a look at the stocks above the various moving averages, and this is another kind of key indicator that we like to look at. And you can kind of see this. So this is S&P stocks above the 20-day moving average. And there was a point there we were looking, certainly at lows that we haven't seen since back in the April correction, but then it shot straight up in the last few weeks, almost back to kind of highs. That's a really good sign. Stocks above the 20-day moving average. Stocks above the 50-day moving average has basically been trending down, and we've got a bit of a counter trend here, and we'll see how that plays out, but that would be quite positive if it can make its way out of there. So we could certainly see some damage where stocks got under the 20-day. They were generally holding above the 50-day, but you could just see this general downtrend. So that's a concern. Counter rally is good. We'll see how that plays out. And then in terms of the 200-day moving average, this is the correction back in April, and it got down to, kind of under 25% of stocks were above the 200-day moving average. It was pretty poor. Been holding up quite well through the middle and really started to downtrend, but a bit of a counter trend. So we'll see how that plays out. But this is reason for confidence. If these start to strengthen as well, that's also a really good sign. So that's the US market. Now I'll cover off on the Aussie market. So I think there's definitely some issues in the Aussie market, and you really need to be, it's kind of a return of stock picking, because the Aussie market is really dominated by some really large companies. And you can see this is the S&P index, and you can see it's essentially held that 200-day moving average, which is a good sign, but it doesn't look very convincing at the moment. It's under that 50-day moving average. In general, nothing good happens under the 50-day and nothing good happens under the 200, but it's wedged between those two. So look, it could really chop around here for quite some time. I don't particularly like some elements of our market. So we'll have a look at the tech sector. We did get a bit of a bounce, but this has wiped out all the gains for the year. And it just looks nasty. And we were saying that for subscribers, that anything below here, look out below, and that's exactly what's happened. And a bit of a counter trend rally, but nothing good happens under the 200, nothing good happens under the 50-day moving average. So it's got a lot of work to do before it looks anything positive. And if it drops this low, look out below. So that makes me extremely cautious. And banks are much the same. So this is the financials index. And our kind of line in the sand was that $30 mark. Boom, it's just broken straight through that. Bit of a counter trend rally. I want to see what happens when it hits that 50-day. does that form resistance that it can't get through, or does it then able to build through that 50-day? But once again, nothing good happens under the 50-day moving average. So that's what I'm watching now, but I don't particularly like the banks either. So a bit of a concern. And then we've got OZXX, which gives us an indication of the Aussie market without financials, without resources. Once again, it's under the 200-day, it's under the 50-day. It's generally been trending down. This hopefully is the low. We've got a bit of a counter trend rally. What does it do here? Is it going to get stuck and pull down, or is it going to be able to make its way through? But it needs more time. So look, you don't want to be in tech, ATech, you don't want to be in financials, and also industrials pretty much you don't want to be in. But the bright spot is the small caps. Small caps actually look really good. So down on the monthly chart, it just looks really constructive. So you've got a really nice base. Had a really strong couple of months. So we needed that breakout and retest, and that's exactly what it's done now. So that looks even more constructive, and that sets you up for a potential move out. And this looks constructive now because look, it's above that 50-day. The 200-day is way down there. So above the 50-day, it's already done all that work, and all we need now is just to see how it plays out. But that is showing relative strength, and that's showing, that's a part of the market where you want to be. And a big part of the small caps is resources. So we've been watching resources really closely. I mean, look at this. MVR pretty much back to all-time highs, or certainly the other day it was. And, this is the thing. Do you have enough resources in your portfolio, considering the strength they're showing here? You've basically got, since on the monthly chart, you've got 1, 2, 3, 4, 5, 6, 7 months up, and it's showing extreme relative strength. Obviously, it's had some volatility here of recent times, but this looks really good, and it's ready to move. It's near all-time highs. I mean, that's compared to, say, financials, or even consider like CBA. This just does not look good. And that's the thing. It's under the 50-day. It's under the 200-day. All the moving averages are downtrending, and it couldn't even get a rally this week. The buying's really quite light now, and there's huge selling back there after its report. So, I put my money in something like Rio here. It just looks so much better. I'll just change that to a weekly chart again. But look at that. Super constructive. Nice big base here. Spent some time here at the previous highs, so it's set to go. It just needs the catalyst, and if this goes, MVR goes, QRE goes, so a lot of ETFs start moving. BHP not as good, but still constructive. Above the 200-day moving average, under the 50-day. We'll just see how that plays out here. But that's where I want my money to be, where the strongest sectors are. Resources look really interesting, really exciting. And we certainly re-added a lot of resources to our portfolio, again, the model portfolio, just this week, and we're looking to add more. So here's XMET, had been held in the model portfolio prior. We got it from this initial run. Then we sold it here, but look, this held that 50-day, and it's just creeping out while the rest of the market's showing, the rest of the market's going down, but this is starting to move up. That's relative strength. That's where I want my money. I don't want to be writing things down. I don't want to be buying things down here. I want to be buying things that are already starting to uptrend. So that looks really constructive. Very excited for the resources sector and how that's going to play out in Australia, how that's going to impact those small caps. As I said, I want my money in things that are uptrending, that are coming out of really nice bases, that are above the moving averages. We've got moving averages trending up. This is where I want my money. I don't want my money in, I'm not trying to pick a low, and I don't want my money in ATech. I don't want my money in financials here. I want my money in a space where things are going to get moving. Why would I buy ATech there? It just looks sick. Look at on the weekly chart. Why would I buy that there? So much selling all through here. Can't even mount a bounce. Under those moving averages, just not a place I want to be. So reason to be excited. Stock pickers, I think, are going to do really well. And I still think our index in general is going to struggle, and we'll watch to see if the small caps continue to outperform the ASX 200, which they have been, and that's been on the back of resources. So really exciting. So the Aussie market, watching resources, avoiding everything else for now. And that leads me to my third point. What else looks interesting at the moment? So, it's actually a bit surprising to consider, but some parts of the market are actually doing really well, the global market. So let's have a look at the Indian market. It's pretty much back to all-time highs. No one's talking about India. This looks really constructive. Look at that, just making those higher lows, creeping out. No one's talking about it, and away it goes. And remember, that was the top performing market out of COVID, with an incredible run. It's actually an economy that's growing fundamentally. It's got a reason to be growing. Really exciting. And it's in new all-time highs, and no one's talking about it. So that's part of the market we're watching. Just in terms of how you play that from Australia, there's certain ways of doing it. We've got that for subscribers, but the ETFs probably aren't looking that good at the moment. But India, new all-time highs, ticking all the boxes. That's something we're watching closely. And obviously I still like Asia, and it's been a little bit quiet. So emerging markets, Asia. Let's have a look at the China index. I mean, this looks quite constructive. So let's just zoom out there on the weekly, and you can see that's a really nice base there for China now as well. So that's formed a nice base, a bit of a breakout and retest. And, it's kind of holding that 50-day. So I'll be really interested to see if it can pop its head out of here this week, or certainly very soon, and hold that low. So if it does, I mean, that we don't know what the catalyst is, but certainly it's set, and it could start to move. So the same thing would then drive, say, Hong Kong, which on a weekly chart, once again, looks really constructive, well set up. Really like that. It's spent enough time here now for it to want to move. On the daily, it's a bit choppy, and it's kind of a bit stuck under that 50. So it needs a catalyst, but, maybe it's a 2026 story, but looks really interesting. I think there's a huge upside there for Asia. And one way to play it, one thing that we have had in our model portfolio is the Asia, BetaShares Asia Technology Tigers ETF. And that's now at a point that looks really interesting now as well. So we knew that it was going to come up against these prior highs and there'll be some resistance there, and that's exactly what happened. Hit a high, settled back in, but it's practically held that 50-day, and it's slightly above the 50-day, well above that 200-day. This looks really constructive as a base here on the weekly. And once again, if this, I'll just wait for all that to clear, but if that can start to move above this point sometime this week, so kind of like 1450, I mean, I'll certainly be adding exposure there. I'll be moving my stop up to there. And I think there's huge upside coming out of a really nice base, and no one's talking about it. So I think that's a really exciting part of the market. Another one that's really quite interesting and is already at new all-time highs this week was QUAL. So Quality, MSCI International Quality ETF. So it's pretty incredible that already is at new all-time highs in a market that's been really challenging. And this is already at new all-time highs. So, I mean, that's where you want your money. I don't want money in the Aussie index that's stuck down here at the 200-day moving average, where QUAL is already making new all-time highs, and the market hasn't even started the Santa Claus rally yet, or the Christmas rally. So that's another thing that we're watching. Probably a bit of a slower mover, but that's the thing. It's at new all-time highs. Probably just want to see how it plays out here. And if it starts to move, I mean, why would you want your money anywhere else? It's uptrending. It's ticking all the boxes. That's where you want to be. And another thing that we've had in the model portfolio and has been doing really well is the healthcare sector, which had been a really poor performer. And sure enough, we were watching this coming out of this really nice base, showing relative strength. So we've had a correction pretty much all November. This has gone straight up. We initially bought our position for the model portfolio there, and it's just trending really nicely. No one's really talking about it, and away it goes. expect some resistance up here, but interested to see how it plays out. And then if we can get a bit of a pullback, we'd probably add to that position as well. So really exciting there. Just a couple things that I'm watching quite closely, and I'm very excited for going forward. So we've got some key data points we'll be watching this week for investors. We've got 13 key ideas in our subscription email for subscribers. So no shortage of key ideas. It's now a matter of how we introduce those into the portfolio, how we allocate our money, what looks the strongest, and what gives us the diversification we need. But looking really interesting. And in that commodity space again, I just love this BCOM as well. And so this is a diverse range of commodities, not just metals, but also as energy, which I think is going to be a really key part of the market. And this will be in, as of Monday, will be in new all-time highs as well. And this has been part of the model portfolio. We've added it in, built it in to a full position, took a bit off, then added back in. But look, this is going to pop out already, new all-time highs. The market's not even moving. Only, it's basically a week out of, 2 weeks ago, it looked really poor. Last week we've had a rally, and we're already in things that are hitting new all-time highs or new 52-week highs. That's where you want your money. You don't want to be sitting in parts of the market that aren't doing anything, or trying to bottom fish in things like ATEC that are below moving averages and just look weak. I mean, these just look like they're ready to go. And once the pressure of the market correction comes off, away they go. You just can't hold a good thing back. So I hope that gives you some colour of what I'm looking at this week. But I'm pretty excited for the week ahead. And once again, until next week, follow the trend.